So transaction 8 is fairly straightforward, right? But be warned, we do have that deferred revenue account here, so we got to be a little careful. Okay, so let's talk about this. We receive cash, easy, easy. We like to see that, right? Cash is easy. We like to see cash transactions, okay? So we receive cash. Oh man, here's the bummer part, in advance, okay? We receive cash in advance from customers for customization services to be performed in the future. Those are very key terms. In advance, to be performed in the future. Those are all important terms to recognize and be aware of when you're reading through accounting homework problems, accounting quiz problems, accounting exam problems. Look for those words. And again, I'm going to have a document for you guys that gives you kind of crosswalk of important terms to look for and how to know when you recognize them, you know which accounts you should be using. So let's ask ourselves again, what accounts are affected? Well, we know that cash is infected, not infected. I mean, although cash is gross, but cash is affected, right? We received cash. So we know cash is affected, and we know that we have a deferred revenue, this unearned, because we haven't earned it yet, service rev, right? Service revenue. We have not earned it yet. So we know those are our two accounts that we're affecting or impacting. So do the accounts increase or decrease? Well, they gave us cash, so that's going to be an increase. And we've deferred that revenue to the future. So we have increased a liability. We have said, hey guys, we got to pay him cash. In the future, right? So it's just a, hey, remember, we got to pay him cash in the future, guys. That's what a payable or a deferred revenue, a liability typically means, right? So question 3, do assets equal liabilities plus stockholders' equity? Again, we know by now, yes, has to, right? It has to. They have to, or we've got a problem. So we're starting to see that we're building out a rather robust box here, showing us all our assets, our liabilities, and our stockholders' equity. Again, this is just your fundamental accounting equation that we're building on. We're showing how these transactions are impacting each part of this equation and how it's remaining in balance as we move through these transactions, as we measure and record these transactions, right? It's helping us to do that. So here we are with transaction number 8. We got $100,000 in cash, so we're going to add that to our total, and that gives us $500,000. But we've also created a liability. We have to perform those services at some point in the future. They gave us cash. We can't count it as revenue yet. We can't recognize it yet because, well, we haven't held up our end of the bargain, right? Which is to perform a service. So once we add all of our assets together and then we add all of our liabilities and our stockholders' equity, we can see that we are still in balance. So hopefully after transaction 7, which was a compound transaction utilizing 4 different accounts, we can see how these simpler cash transactions are much easier and definitely the ones that we want to see more often, right? So transaction 9, we're going to pay salaries of $28,000 for the month of December. Again, easy. We like this. This is cash. Cash makes us smile, right? Cash equals smiles. Okay, so pay cash salaries, so we know we're going to have some kind of expense of $28,000. So we have salaries expense. What accounts are affected? Salaries expense and cash. Okay, have they increased or decreased? Well, our salaries expense has increased, right? We are increasing the amount of money that we are using for, or the amount that we are using for an expense. Okay, that's how the expenses work. We increase expenses. You are very, 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 very rarely, and I'm just going to, for the purposes of this class, say never decrease in expense, okay? Well, until we get to chapter 4, but when you're making an original journal entry, which is what we refer to these as, we're never going to decrease in expense. If you're decreasing an expense in an original journal entry, then it's because somebody's made an error, okay? And then we have cash. Cash has decreased, right? We spent cash. We gave somebody a stack of cash to pay them for their salary for that month. So that's a decrease to an asset. So what do we have so far? Well, we have assets went down and expenses went up, right? So How is that going to impact our accounting equation? We're about to find out. So, do assets equal liabilities plus stockholders' equity? Is the account still in balance? Is the accounting equation still in balance? Yes, always yes. You're going to notice a trend, hopefully, that all 10 of these transactions, the answer to question 3 is yes. Okay, so let's take a look at this. Let's break this down. We got assets here. You can see that we've spent $28,000 in cash on an expense called salaries expense. Okay, notice how it's a negative here, but I told you it's an increase to the expense. Well, it's a negative here because we're reducing retained earnings, right? So we'll say it reduces retained earnings. So it's a negative. Okay, so let's walk through that just looking at the accounting equation, just going through the accounting equation. So let's write it out. Always going to be the first step. When I talk to you guys in my office, when you ask me questions about these problems, I'm going to say, did you write out the accounting equation? And if you said no, I'm going to say, let's write it out. If you say yes, I'm also going to say, let's write it out, and we're going to write it out. So assets equals liability plus equity. What is equity? Well, we know that equity is right now our common stock and our retained earnings. Well, we know there are more components of retained earnings. Net income and dividends. Again, notice I put this in a negative because it decreases retained earnings, right? Well, what is net income? Net income is your revenue and your expenses. Again, notice I put that in negatives because expenses decrease your net income. Okay, so what's happened here? Well, we have decreased an asset, cash. That one's easy. No need to go much further there. And we've increased that expense. So we have an increase in expense, which is a decrease to net income, which is in turn a decrease to retained earnings, which is a decrease to equity. So if you were asked on an exam or on a quiz, how does this transaction affect your accounting equation? You could say it decreases assets and it increases expenses, which in turn decreases equity. Okay, so what's going to happen is you're going to have this decreases assets and you'll have one of these two. They'll say it decreases assets and increases expenses, or it decreases assets and it decreases equity. Just know that if you can write this whole expanded equation out and just mark what's happening as you go through it, you're going to have a much easier time answering those questions. And like I said, I absolutely love asking those questions on exams because I believe in my heart that understanding this accounting equation is one of the most important things we do in this class. So I've told you, I've been telling you guys since the beginning to know this accounting equation forwards and backwards and understand the impacts on it. So let's take a look at this last transaction here. Okay, so transaction 10, we pay cash dividends of $14,000 to stockholders. Again, we say we pay cash. Yay, again, smiley face. We're happy about cash. Cash is easy, right? This is what I tell even my graduate students when we work journal entries. I say, cash is easy. You see a cash transaction, you are clapping and jumping for joy because it is simple. So when you see pay cash, just know we're happy about that. Makes it an easy journal entry. Typically, only 2 accounts that you hit. So which accounts did we hit? Well, dividends, right? We talked about dividends are not an expense. Okay, dividends are their own thing. Okay, so as soon as you say we declare that we're going to be paying dividends this year, they're as good as paid. Okay, and the reason we talk about this is because dividends really do just get closed straight to retained earnings, and I can break that down using the accounting equation for you, right? So assets equal liabilities plus equity. Once again, okay. We're going to break down equity into common stock and retained earnings into net income and dividends. Dividends are not a component of net income, right? So when we want to get rid of revenues and expenses, which we'll talk about at the end of chapter 4, they go to net income, and then they go to retained earnings. Now, the way we're going to learn it is we're going to skip that middle section and just hit retained earnings. But dividends, they just go directly to retained earnings. We do not count them as an expense, okay? So just know that dividends are not an expense, okay? So we're hitting dividends and we're hitting cash. We've increased the amount of dividends that we've paid, and we've decreased the amount of cash that we have. So, do assets equal liabilities plus equity? Yes, absolutely. Again, it's always yes. The answer has to be yes. If it is not yes, then we have done something wrong and we need to go back and reevaluate the transaction, reevaluate our calculations, whatever the case may be. So here we can see that we paid cash, $14,000, because they told us we paid cash for the dividends. And then here, way over here on the right-hand side under stockholders' equity, we can see that we paid $14,000. So we had $14,000 in dividends. Now notice again, they've got this pesky negative sign there, and recall that I always put it as a negative when I am writing this in the accounting equation, and that is simply because these, once again, decrease your retained earnings, right? So when you pay a dividend, it decreases your retained earnings. It has an overall negative impact on your retained earnings.